Hi traders, this is the continuation of Pro Traders Workshop series. Today is going to be candlesticks and chart patterns. Very important to be able to master these two. Otherwise, trading becomes rather difficult if you do not understand candlestick patterns and chart patterns. There are other types of trading strategies. The trading that I teach is basically chart patterns and candlestick patterns at specific support and resistance levels, either using supply and demand zones or previous support and resistance levels. The Smart Trader platform will recognize chart patterns, or rather candlestick patterns, and pretty much all of them are here, all bearish and all bullish. And all you need to do is, when you do see a candlestick pattern, is take your mouse and highlight that particular candle, and it will show up as a reversal candlestick pattern or a continuation pattern. So let me just switch over to a chart and just give you an idea how this works. There are two things that I like to see in a chart before I look to buy or sell, and that is a stochastics indicator that is overbought and oversold, as you see here on the euro dollar, and a candlestick pattern. Now, the candlestick pattern on Smart Trader is highlighted, notice here. So that is a bullish engulfing candle, and it is right here. It's over here somewhere. There it is, bullish engulfing candle. It's highlighted for me, and if I take my mouse and put it over that candle, there it is. It says bullish engulfing candle. So this is a high probability trade. After the market has sold off substantially for 2 weeks, stochastics is overbought. There's no interest. Notice that the candles started getting shorter, smaller, and smaller. It started here, long bearish candle, then another long bearish candle. Then the candle started getting smaller and smaller, and that indicates no interest, very little interest in selling. Then the bulls take over, and a bullish engulfing candle is created, which means that this run essentially is over. The bulls have taken over. Stochastics is oversold. And we look to buy on the next candle. Now notice that the next candle had retraced to approximately 50% of the previous candle. This is very typical. That would be the best entry. And then we would put our stop loss below that bullish engulfing candle. And there's a trade that was about approximately 306 pips on that trade. Here's another one to the left, where for about a week the market was in a rally. We're in a downtrend, but this is a retracement. And this is actually a better trade because the candlestick pattern, the reversal candlestick pattern, is in the direction of the trend. So not quite overbought on the daily chart, but on the 4-hour chart it was. So, but we are looking at candlestick patterns, which is more important than stochastics indicators. Stochastics indicators is just going to support the candlestick patterns, not the other way around. So anytime we do have a candlestick pattern, we have to look and see if stochastics is supporting. If it's not, then that's okay, as long as it's not all the way down to 20 where it's oversold. It's halfway, which is fine. So there's a bearish engulfing candle. Notice that the market rallied. It retraced to about 50% of that candle. That would be your entry. Your stop loss is above the candle, and your target is all the way, that's about 400 pips on a daily chart. Okay, let's move on. Again, the candlestick on the Smart Trader platform will be highlighted when you see in this one. All you need to do again is put your mouse on that candle, and it will tell you that it is a bearish engulfing candle. Also, this 3-candle pattern can be considered an evening star. We'll get into that in a minute. So what I do is I go down to stochastics indicator and I notice it is overbought. I look to my left and see that pound dollar had rallied for over 672 pips before that bearish engulfing candle appeared. So this rally that started all the way back here in January 2021 ended in February. So an entire month of a rally, and you would take your trade on the next candle and your stop loss would be above the swing high of the bearish engulfing candle. And notice the retracement, but it never broke above the swing high, almost 300 pips. We'll talk about exits later in the series of this workshop, but right now we're focusing on entries. You can, even use the stochastics indicator oversold as a target. So if you entered all the way up here on the bearish engulfing candle, then it logically would make sense to get out when stochastics is completely oversold. Here is a bullish engulfing candle. Again, I take my mouse and I highlight the candle that is darker than the other green candles. And I look for confirmation on stochastics. There's your trade after a long sell-off. So I look to my left to see how far the market has sold off. And that's about 367 pips. Notice that this bullish engulfing candle completely engulfed about 10 of these smaller candles. You can always tell when the market is oversold based on candlestick patterns when the candles start getting smaller and smaller. Indecision candles, the bears try to push price even lower and failed. The bulls took over, creating a bullish engulfing candle. Stochastics is oversold. So that's a high probability trade, and this trade lasted for about 300 pips. Here is what we call a bearish evening star. And again, you don't even have to know what the candlesticks look like, because only as long as you put your mouse over the highlighted candlestick patterns, it will tell you what it is. It's a bearish evening star after a strong rally for 2 weeks. And then I like to confirm my trade using stochastics indicator. Overbought stochastics with an evening star. Notice that price rallied for over 500 pips prior to the evening star, and then sold off, gave everything back and more. Okay, that completes our lesson on candlestick patterns. The following next lesson will be on chart patterns, as you see here, which is a double bottom and also divergence. And we'll talk about chart patterns in our next lesson.